Crypto Banter, this is Crypto Banter, this is Crypto Banter. Crypto Banter for you, this is Crypto Banter, this is Crypto Banter, this is Crypto Banter. Crypto Banter for you, smash those likes. Smash those likes. Crypto Banter for you, smash those likes. Smash those likes. Crypto Banter for you, smash those likes. Smash those likes. Crypto Banter for you, for you, for you.
The price of Bitcoin fell below 30,000 for the first time since June 22nd. About $98 billion was wiped off the entire crypto market just in 24 hours. This morning, Bitcoin at 29,441. Ether's down about 4.6% to 1735. Pressure across the board, though, with declines of more than 7% for Litecoin, for Ripple, for Dogecoin.
Well, pressure indeed across the board. Bitcoin finally breaking through that 30,000 support level that we thought Bitcoin would definitely maintain. Today, we're going to look at how low the Bitcoin price can go. And our resident sniper has a new metric that has never failed. And he says that this metric can tell us whether we're going to be in a prolonged bear market or whether this is just a short bear market before a massive, massive bounce. So stay tuned until the end because that's when we're going to be talking about this indicator. Welcome back, everyone. Welcome back. Welcome back. I'm Crypto Man, and I'm here every single day at 10 a.m. EST. And from tomorrow, we're coming back to you guys at 6 a.m. EST because Sheldon is back. The man is back. The sniper is back. I've been sitting with Sheldon all afternoon today. We've been talking about this indicator that he has found. He found this indicator. He called me into his office and he said, listen, I've got this indicator. You've got to come and see this. This indicator will tell us whether we're going to be in a long bear market or whether we're going to recover very, very, very quickly. I see we do have some comments that say Banter almost on time. We've said to you guys, we're trying to move back to on time. That's because we are building a 24/7, 365 streaming crypto station. We're the only guys in the world doing this. And we're going to introduce a whole lot more shows, including one with our friend Bryce, who was here yesterday. Remember Bryce, the guy that spoke about NFT gaming and Axie Infinity? Well, he is starting his own show on Crypto Banter. It's called In the Game, and it talks about in-game assets and how you can make money buying NFTs inside games, how you can earn playing money in the game. So that is why we're starting to start early. So if you are new to our channel, welcome, welcome, welcome. Smash the like button, subscribe to the channel, hit the bell notification. You want to hear an amazing stat? We found out today that 86% of our subscribers view our shows. 86% of our viewers are subscribers, which is by far the most loyal community in crypto. It basically means that people that subscribe to our channel stay with us, and 86% of all our viewers are subscribers to the channel. So thank you guys for being the most loyal community in the world. Bull market or bear market, we're going to get you guys through this. Me and my sniper and I. Let's get Sniper on the show. Sniper, how are you, man? How are you feeling?
I'm good, buddy. I'm good. I'm ready to get back in action. I see the market's not agreeing, but I'm ready.
Did you go to boxing this morning?
I did.
You had COVID a week ago. You already boxing.
Getting the fitness up again. Getting the head up again. I just got to get everything back. It's been very boring the last week and a half. So it's about time to just get everything flowing again. Make sure my body still works.
Sniper, we saw yesterday that Bitcoin broke the $30,000 support level for the first time, and we saw some other indications of fear. What are you making of it?
The problem is there's no volume yet, right? So we're getting fear in there, but if it is fear, it's the smaller hands that's the fear at the moment. It's not really the much larger institutions just yet. Obviously if the price does start to accelerate, but if we look at volume-wise, that volume hasn't really been increasing. We haven't been getting a big shift or massive. Remember the previous dumps when we started dumping off, you could see how the volume was really, really increasing. And right now, we're still on the average volume we've had the whole month, basically, the last 20 days. So we haven't had massive volume. But now that's obviously, you know, when we start crouching down on volume is when we usually start getting to a point where volume is coming. Now, is that when we still have the previous low, which is the 28,800? Is that the region? If we break that, maybe some volume comes in, or, you know, there is levels to say that we remember that the price went so quickly at the zone over here. We know how price comes back. We've done it a few times now where we come back, capture. So I'm still waiting to see the volume to really know that it's the big hands. I don't feel like the big guys have fear in the market just yet.
There is not going to be volume in this market until the GBTC runs out. The GBTC runs out, that's when you can get volume on the market. Anyway, stay back in the waiting room. We're going to talk about that one indicator that you found for us. Exciting stuff. I mean, that indicator, you can't argue that indicator, right? You cannot argue that indicator.
You can't lie with history. So so I'm excited.
Amazing. All right, so if this is your first time here, subscribe to the channel. 2 streams every day. If you are new to the channel, you don't know about Sniper School, well, if you want to be a part of Sniper School, you need to subscribe to the channel. Sniper School launches on the 1st of August. It's absolutely free. Guys, I have to share this with you. Sniper School is like being back at school. You attend classes which are taught by blockchain experts around the world. You have a class of your friends, and it is absolutely amazing and fun. And the way we've created Sniper School is it's really the most fun way to learn everything you need to know about crypto. And I want to just show you one of the modules. So this is the module that talks about network effect. And this is teaching people how blockchains are actually networks. And you can see that the way that Sniper School is being taught is actually a lot of fun. It's not a serious school. It's the most fun way to learn the fundamentals and technicals of crypto. And I'm so excited about this. We've been working on it. We've been refining it. We've been looking at the content. And on the 1st of August, we are launching Sniper School. And it's absolutely free. We don't charge you for anything on this channel. It's absolutely free. All you need to do, watch the channel, subscribe, like, join my Twitter, join Sheldon's Twitter, join Crypto Banter's Twitter, join Fred's Twitter, and just make a noise. And we're going to select 100 students, or in fact now 98 students, because we chose 2, right, Freddie? Yeah, we chose 2 the other day. So we chose 2 the other day. Fred's buying NFTs again. All right, so if you're new, subscribe, come to Sniper School. Also, we do have something to cater specifically for the salty people in the comments. So we actually created a separate stream for the salty people. Yeah, we've got a salty video for you guys. Every time we see salt, we're just going to throw some salt on it. Exactly. Cool, let's get on with the show. Freddie, let's get on with the show. Okay, so I guess the biggest story of the news is the stock market correction that took place yesterday. Well, stock market correction. We had one down day, which took the stock market, the Dow Jones, down about 2%. We saw that yesterday, and that's what took Bitcoin down so much. And if you look today at the markets have already recovered 365 points, or 1%, which means that yesterday we went down about 2%, and the markets have already recovered 1% of the 2%. So this doesn't feel like it is the big market correction, or the big stock market correction that we've all been waiting for. And we've said that the one thing that is really dangerous to crypto is a stock market correction. We saw signs of that yesterday, where the markets went down by 2% and Bitcoin went down under the 30,000 support level, and everyone was in extreme fear. It's strange to me that people are in extreme fear. People in the stock market are also in extreme fear. Why do I say it's strange? Because if you look at the chart of the stock market's gone up from 18,000 or whatever the number was when the lockdown started in March, all the way to 34,383 in almost a straight line with 1 or 2 corrections. And despite that, CNN did a survey this morning, or published an article this morning, which shows that the stock markets, the fear and greed index, not in crypto, but actually in all other markets, is in extreme fear. So if you look at the stock market indicators, if you look at the junk bond indicator, fear. If you look at market momentum indicator, fear. If you look at market volatility, extreme fear. If you look at safe haven demand for things like gold and Bitcoin, extreme fear. Stock price strength, extreme fear. put and call options, extreme fear. Stock market breadth, extreme fear. And you can see that the markets are more fearful than they've been in a long, long, long time. In fact, they are nearly as fearful as they were when COVID first hit in March. The strange part is that this time it's happening when the markets are at 1% or 2% away from an all-time high. At the same time, crypto is also in extreme fear. I don't get it. I don't get how a market that is near an all-time high can be at extreme fear. I get crypto. Crypto's had a 55% correction. We are drifting lower and lower and lower and lower into a bear cycle. And every day as we don't recover, we slip more towards this bear cycle. And specifically with crypto, we haven't been getting any higher highs. We haven't been getting any decent recoveries. We've been getting lower highs, lower lows, lower highs, lower lows. And this is the pattern that's been happening. So I get why the crypto market is heading towards extreme fear. We've been going through this for days and days and days. It must be close to 3 months that we've been going through a crypto correction. So I understand why crypto people may be at extreme fear. What I don't understand is how the stock markets, the bond markets, the gold markets can all be at extreme fear. So I'm going to get my friend Gareth Soloway on the line. Gareth, welcome back, my friend.
Hey, Ran. Great to be back with you. How are you?
Good. How are you, my friend?
Very, very good. Thank you.
Help me understand this. You called on Friday that you feel like there's going to be a stock market correction. And lo and behold, comes Monday, and we saw a stock market correction. I think it was the Dow's biggest loss in terms of number of points in 2021. CNN then published this fear and greed indicator, which shows that every single market is now in extreme fear, despite the fact that stock markets are 1% away from their all-time highs. What's going on?
So it's a great question, and I think you have to take it with a grain of salt, right? So if you look at that CNN greed and index fear, they're taking a sample size of the last 2 years. So let me just read you this from this, and I brought this up as well. For the put and call options, so it's saying during the last 5 trading days, volume in put options has lagged volume in call options by 47% as investors make bullish bets in their portfolios. So the first part is actually telling us that there's still way more calls being bought in the market versus puts. Now, when people are buying calls, they're making bullish bets, right? So the next caveat is why it says extreme fear. However, this is still amongst the highest levels of put buying seen in the last 2 years. So what they're doing is they're taking a sample size of 2 years and saying, well, a year ago, people were buying even more calls, and now they're just buying a little bit less, but still a lot more. So to me, that's still an indicator that there's still greed in the market, but because their sample size is so small, it's showing up as extreme fear. So I do caution that indicator is a little faulty in that respect in terms of what it's showing. Now, having said that, from everywhere I go, I still see extreme greed in the market. So if I go to the coffee shop, everyone's talking about their 401ks being at all-time highs. Every time we dip, we're seeing buy the dippers rush in. Even on a 1% dip yesterday, 2% dip yesterday, you're seeing people come in and buy the market and be like, oh, this is the biggest dip. I got to get in now because we're going to go back to all-time highs. So to me, I honestly disagree with that CNN indicator. But that's just my opinion.
Gareth, yesterday felt scary on the markets. Yesterday, it felt to many that it could have been the start of a correction. At one point, the Dow Jones was down like 900 points or 800 points. It did recover slightly before the close. Why did yesterday feel so scary?
Well, the answer is that we just don't see big corrections in any days anymore. I mean, it's so rare that we get down 2% days in the markets that when it does happen, it does freak us out. That's not healthy, right? I mean, if you look historically at the amount of 10% corrections, 10% corrections are pretty common in the market. And we have just been trained by the Federal Reserve printing trillions and trillions of dollars and the government sending free checks out to everyone. Well, not free. I mean, obviously our tax dollars and our debt that we're taking on. But that's why you've had this creation of just this massive inflow of liquidity into the market that has made the stock market go up almost nonstop, aside from COVID, since 2009. And again, it's scary when you just get a 2% correction, but just wait until we get 10 or 20 or 30%. Then it'll be scary.
Let's play this out. We get a 10, 20, 30% correction. What happens? What happens to the market at 10, 20, 30%? If we get a 25% correction in the market, what does the government do? What does the Fed do?
Well, I mean, the Federal Reserve, because they're programmed and they've been doing it for so long, will come in and will do something to stem the bleeding and try to patch it up. The problem is that every time the Fed intervenes, what they do is they create a false sense of security for the markets that then lifts it in the short term, but does not solve the underlying issues. So this is one of the biggest analogies that I have, is that the Federal Reserve is like a drug dealer, right? And basically they just continue to pump the person, which is the market, full of drugs. And the market needs more drugs to kind of get the same high, continue to go higher. And eventually you have two outcomes, right? You either have major withdrawal when the Fed takes that punch bowl away, or you have a market that just ultimately keels over and dies because of either hyperinflation or a catastrophic collapse. And so ultimately the Fed will come out at certain points and do things, but there'll be a point where it doesn't even matter. And we actually saw this in 2008 and 2009. The Federal Reserve tried to intervene with different things, and the market still sold off 1,000 or 2,000 points a day on the Dow Jones Industrial Average. So again, right now, the markets are still near their all-time highs, but I do caution people that there are underlying major issues here. And by the way, you're already seeing deleveraging in the markets, right? Right now, it's in crypto, which was the highest risk asset, arguably, and that has pulled back significantly. It hasn't bled into the large cap technology names like Apple and Google and Microsoft yet, but ultimately that will happen when this extends. So I do want to just mention to people that the markets are already correcting in certain areas. It just hasn't spread fully to the rest of the market yet.
So you still maintain that the right place to be is to be short?
For me, yes, for the indices. Now, I do have long positions. Like yesterday, the airline stocks hit major support, so I picked up a little on the airline stocks. I picked up some DAL call options. I picked up some JETS, Jets, which is an ETF. I bought that ETF. So I want to be clear. I'm a shorter term trader, so I'm in and out for a few days to a week or so. And the airline stocks and the cruise lines yesterday did hit technical support. And sure enough, we're seeing those stocks and ETFs up today on the back of this little bounce. But when you're talking about the indices, I have to be short here. Now, it's important to understand, it's not like I'm putting 100% of my account in the short side, right? This is allocation at its finest. You want to do small positions so you can enable yourself to maneuver and add a little bit here and there. But yeah, net short the indices here. Absolutely.
I saw gold going up yesterday. As the markets were going down, gold was creeping up. I think I saw it at 1815 or 1810 at some point. At the same time, Bitcoin was going down. Now, I want to read you something from a report from, it's a company called Ruffer. Now, Ruffer bought into Bitcoin. They made $1 billion buying into Bitcoin. They sold, and they said the reason why they sold, they said Bitcoin may yet fulfill its potential, but the market displayed signs of froth. Retail speculation, excessive leverage, the Coinbase IPO, Tom Brady's laser eyes, Dogecoin, Elon Musk hosting Saturday Night Live, $60 million NFT sales, and that is why they exited. But what they said is, they said, in the short term at least, Bitcoin was exhibiting characteristics of a risky speculative asset, and therefore no longer fulfilled the portfolio role we had intended for it as a protective and diversifying asset. When Wall Street look at Bitcoin and compare it, do they still see Bitcoin as a digital gold?
It's hard to say how everyone on Wall Street sees it. That's how I see it. I still view it as a digital gold. I think that, again, you're going to have the digital yuan from China kind of start to take over the reserve currency plus the dollar. Those will continue to be reserve currencies for the future. Those are key because governments can still print them. I love Bitcoin long term because I love the fact that it can't be printed. It's one of the reasons why I don't like Dogecoin, for instance, is because, you know, there's more Dogecoins printed every single minute, basically. So I do think, again, their analysis is actually correct. During the highs when we were at 65,000, you had Elon Musk on SNL. You had all these other indicators that were absolutely normalized for a major top. And the speculation was so transparent, right? So whenever you invest hard-earned money, and this is how I view it, is that you have to have a fundamental thought process behind it. Why are you doing this? If you're investing because it looks like it's going to the moon and you're doing laser eyes and you're just going nuts, that's not a reason, a fundamental reason to be long Bitcoin, and that shows you speculation. Speculation has to be flushed out of the market at some point, and I think that started in Bitcoin.
If the stock market is recovering, and we can see that the stock market is recovering, let's quickly jump to the stock market chart. You can see that the market is back up 1.29% after it went down 2% yesterday. And we know the stock market decline caused Bitcoin to break down through the $30,000 level, which it had been holding. Why isn't Bitcoin recovering? Why is Bitcoin down 3.68 and the stock market up 1.29?
So that's a good question. I think in the very short term, it's not so much, you know, there's little tweaks in terms of correlation. For me, it's the continuing deleveraging that eventually the market will follow. So if you remember in 2017, the crypto market topped out in December, and then it was about 6 weeks to 2 months later that the stock market began to correct as well. And I really look at the crypto market as a leading indicator here. One of the reasons why I'm bearish on the indices is that the crypto market shows the deleveraging first, right? So it's a leading indicator because it's such a speculative asset. Smart money was getting out knowing that eventually the stock market is going to tumble as well. And so again, Bitcoin will actually bottom first before the stock market and start to move up. It's just not to that point just yet.
Gareth, it's such a pleasure having you on Crypto Banter. I mean, you really are becoming part of the family. The community love you. So thank you so much for giving us perspective, my man.
Oh, you're welcome. It's fun to be here. I love coming on.
Yeah, the guys love you. They come. The comments are amazing on Twitter afterwards. It's amazing. So thank you. You really are part of the family here. So Mikasa Sukasa. I think that's
Thank you so much, Ran. I appreciate it.
Thank you, my friend. Thank you, my friend. Guys, that's Gareth, and he is again explaining to us what's going on the macro markets. Let's go back to Bitcoin. If you look at Bitcoin, people are fearful. We said it. Let's quickly go back to look at the fear index on Bitcoin. But as more and more time passes, more and more people are getting fearful. But the smart money is starting to buy. So, you know, there's that old adage that says, when others are fearful, you should be greedy. Well, it looks like the big investors, the experienced investors, are actually really applying that, and they're really starting to buy. We saw two announcements in the last couple of days. I want to talk to you about the small announcement first, and that is that the Rothschilds, Fred? So the Rothschild fund, started to buy Bitcoin, or they added to their GBTC position. But then we also had another announcement, and the other announcement was that Cathie Wood's fund, which is ARK Invest, also bought 321,000 shares in Grayscale, which is about a $70 million position in Grayscale. So the smart money, the experienced money, is waiting for Bitcoin to go near $30,000, and they're buying. And not only are they buying Bitcoin because others are being fearful, but they're buying GBTC. And that's exactly the trade that we've been pushing on the station. We keep saying that if you want to buy Bitcoin right now, the best way to buy Bitcoin right now is to buy the GBTC, because you're getting Bitcoin at 13.45% discount. That's exactly what Cathie Wood has been doing. She's been buying GBTC. She bought 310,000 shares yesterday of GBTC. Let me see if I can find that. Here we go. So we've got ARK Invest, trades 19th of the 7th, 2021. Let's look at what she's buying. She's buying GBTC. She's buying Coinbase shares. She's buying a whole lot of other stuff. So that's their purchases on the 19th of July, which is 2 days ago. Yesterday or 2 days ago? Yesterday. And you can see she bought 310,000 shares, which is $70 million worth of GBTC. She also bought 48,000 shares of Coinbase. So you can see that she's all in, and she's using these dips to buy GBTC. It's strange to me that Cathie Wood, or it's maybe not strange, that Cathie Wood's buying this. And that's because tomorrow we've got this big conference where Elon Musk is sitting down with Cathie Wood and with Jack Dorsey from Twitter. And they're going to debate this. Fred, play that video. Let's look at that video.
More than 12 years after its creation, Bitcoin is just beginning to gain institutional acceptance. It's time we have an informed discussion. The B Word is a Bitcoin-focused initiative that aims to correct mainstream narratives about Bitcoin, explain how institutions can embrace it, and raise awareness around areas of the network that need support. Featuring Cathie Wood, Jack Dorsey, Elon Musk, Lynn Alden, Nick Carter, and many more. Join us in our effort to support the Bitcoin network.
So that's the B Word, and that's happening tomorrow. And that started because of a Twitter discussion between Jack and Elon. And I want to show you this thread. Let me show you this thread that was posted on Twitter by a guy called Chrysanthith. And he says, on the 21st of July, 2021, several notable individuals are meeting to speak to institutions about Bitcoin. In this short thread, I will go over why this may have some very large implications. Could these implications be the reason why Cathie Wood is stocking up on her Bitcoin? Why is Cathie Wood buying 310,000 shares of GBTC, $70 million worth of GBTC, just 2 days before? Remember, this is happening tomorrow, just after our show. Just 2 days before her, Jack Dorsey, and Elon Musk sit in a debate, which is going to be publicized. The first thing I will point out here is that the very interesting connections between the three business leaders attending the B Word that I coincidentally mentioned in a thread a few weeks ago. I highly recommend you read it to understand this thread. But you can see that this started with this, let's have the talk, and Elon Musk responded, for the bit curious, well, very well then, let's do it. Done, we'll set it up. And this is quite interesting because you know that Cathie Wood and Jack are working on renewable energy initiatives. And this is what this thread goes on to say. So this thread goes on to say, it really seems like there may be something bigger going on behind the scenes. Square and ARK Invest actually wrote a research paper which mentions how Bitcoin mining can promote the use of solar energy, which Elon Musk agrees with, and Elon Musk has basically dedicated a third of his life to doing. You can see that because Jack once tweeted and said, Bitcoin incentivizes renewable energy. And Elon said, true. That's how the whole thing started. Anyway, well, Bitcoin will simply act as a buyer of last resort for the green energy market. Basically, what this is saying is that Bitcoin mining may become the buyer of last resort for anyone who's producing green energy. And he says, don't believe me, listen to what Cathie Wood said.
Include Bitcoin mining and we believe that Bitcoin mining integrated into the distributed grid, and by that I mean solar roofs, power walls in homes, utilities, merchant power producers, starting to include Bitcoin mining in the ecosystem. Why would they do that? They would do it because renewables are intermittent power sources, right? Weather, is it sunny or not? Wind, is it windy or not? And Bitcoin mining could take off if there's excess energy from solar being loaded into power walls. It can be offloaded into Bitcoin mining, and the whole ecosystem. We believe that Bitcoin.
So that's Cathie Wood, and she also agrees with Elon that Elon will be part of the solution here. So
renewables are becoming incorporated into the Bitcoin mining ecosystem, and that Bitcoin mining might accelerate the adoption of solar. And I think Elon will come back and be a part of that ecosystem as well.
So that's her thoughts. Now, bear in mind that her thoughts are not only thoughts, because she's one of the biggest investors and one of the longest investors in Tesla. And rumor has it that her and Elon Musk have a very, very, very strong relationship. Elon Musk relies on Cathie for advice. She's almost a mentor to him in many ways. And tomorrow she's going up on stage with him. And I think we can expect, like Chrysanthith says, he doesn't expect a big announcement, but he certainly expects Elon to warm up to the facts. And on that point, I think that Cathie Wood and Jack are going to be well armed with way more facts than Elon has got. And I think when the world sees that Elon gets disproven, or Elon's theory about this ESG gets disproven, I think Elon will have no choice but to come to the other side. And when he does come to the other side, that may be good. That may be a big sign for the crypto markets, for all the naysayers. It's almost the opposite of the ESG thread. Now, that's going to happen tomorrow, just after our show. You can register on the B Word, or you could have registered on the B Word. I think if you can't get in, then what we'll do is we'll try and stream it, Freddie. If we see that there's enough demand, we'll try and do a live stream for you guys where we actually comment on what they say. Let's try to do that. See if it works. All right, so you got to understand that the smart money is buying Bitcoin, and every time the price goes down, the smart money is buying Bitcoin. There's a very, very, very good reason why the smart money is buying Bitcoin while the prices are going down. They're dollar cost averaging. And the reason for that is that the smart money understands the Bitcoin cycles. Yeah, smart money understands crypto and Bitcoin cycles. The smart money understands well the crypto and Bitcoin cycles. And I'm going to show you what I mean by crypto and Bitcoin cycles. Crypto and Bitcoin are tricky because you have to hold the assets for a very long period of time before you start making your returns. And then your returns come in a very, very, very short period of time. And if you're not holding, and then your returns come in a very, let me mute this other device. So if you're not holding in the period of time when the move happens, you'll completely miss the move. I want to show you what I'm talking about, and I'm going to take you back all the way to 2013 because that's as far back as this data goes. So a couple of things that I want you to notice here. There was a massive correction in 2013. If you look at the chart over here, there was a massive correction in 2013, and we're going to talk to Sheldon the Sniper about that correction. But look what happens in the big scheme of things to the hodlers of Bitcoin. This correction, which seemed like a huge correction at the time, becomes a tiny blip on the radar in the big scheme of things. But only if you held right through the correction. Now, I want to show you something else. Look at the people that held Bitcoin in 2012. The price hovered, and nothing happened for months and months, until all of a sudden, in June, the price started to pick up. And when did it top? In August. 2 months. And then the price started to come down. And for a long time, the price was flat. And then somewhere around February, March 2013, the price started to run. And how long did it run for? Till April. 2 months. And if you didn't sell in those 2 months, then you experienced a huge correction, a correction that went from $260 all the way down to $46, an 80% correction. And then you were forced to hold your Bitcoin again for months, from 18th of April all the way to October, before the next bull run started. And that's the trick, guys. That's the crypto cycle. And you can go through to 2017 and 2018, and we're going to bring Sheldon on the show to show us this indicator that he's found. But the only way to make money in crypto is to hold for long periods of time, because you don't know when the bull market is going to start. And when the bull market does start, all the gains are realized in 2 months. Let's bring Sheldon onto the stream. Sheldino.
Yo, what's up?
What's up, man? You always make me smile. Sheldino, what do you think of the Bitcoin cycle? The cycle that says that holding crypto means that you've got to hold for long periods of time. And if you do hold for long periods of time, you get insane returns, but only over a 60 or 90-day period, or sometimes a 100-day period. Then you get a massive correction, but your corrected price is still way higher than the other price, than the beginning price. So
I think it's Ran, that's the big thing. This comes with obviously experience in the markets and being through this many times, because it's done it. End of the day, Bitcoin's had a 50-60% correction, but it was $3,500 last year. It goes through these cycles. It's actually done it, I think, 10 times. There's been smaller corrections in between, but 10, 20 times. It's done it many times. And it does take 2-3 months. what's quite confusing is what people don't understand is, your bear times are, sometimes even if you look at the 2018, 2019 run, and we'll go through all of that shortly, that through that stage, there was still a big range. It wasn't just a bear cycle. We still went from 3,000 to 6,000 to 7,000 back to 3,000. So there's still massive gains in there, but 3 months of bearness, 6 months of bullness, 3 months of bearness, 6 months of bullness. We've seen this many times.
Let's look at this. So 2013, 25th of April, steady from April until about October, November. In October, November, the price starts to rise. You can see it just breaks the April high in October. So people would have had to hold their Bitcoin from April all the way to October. And then from the 18th of October to the 1st of December, 2 months, you would have made gains of from 127 all the way to 10x gains. Then the market corrected, and the correction took a long time. Remember, it went from December. It was a correction for a year. And when did it then get to those highs? Let's go back there. Let's go back there. Let's go back
zoom out. But end of the day, go have a look at those lows. So I know we're focusing on highs there, Ran, but before we started that big pump in 2013, where was that low? And then we had a correction. Where was the next low? And then where was the next low? And if you see that, yes, we have corrections, but Bitcoin's been going up since the beginning.
But what you can see is that the hodlers, you see, the problem is that if you sell along the way here, you may miss the turn because you'll get to here. You won't know that we're here. The price will go up. It'll fake out. It'll come down. You'll think I called it right. But then the higher high starts, the higher low, the higher high, the higher low, the higher high, the higher low. But the problem is that by the time you get your confirmation, you would have missed 200, 300% returns. That's when you would have got your confirmation. That's the reason why you have to hodl through the bull market and the bear market, because you never know when this market's going to turn. You don't know when the higher high keeps coming. And if you wait for the higher high, you're going to have a problem.
And you know what? And I do get it. Sometimes if you really bought the top, it is quite tough. The 2017 top was $19,000. It took 3 years to get back there. So, it does make sense. And then all of a sudden, after 3 years, 6 months later, you've actually 3x your money. So I do understand the point, but the big point that we're trying to make is over time, you're putting your money in an asset that's growing. We see the dollar falling. We see everything falling. It doesn't matter if you are catching it. You're going to learn and you're going to suffer in this time when you did buy it way too high. Okay, you literally chased the pump. You bought Bitcoin after 1,200% in 6 months, 7 months. Soon you're going to realize, yes, you made that mistake, but for a 10-year hold or 5-year hold, you still bought an amazing asset that's going to grow. And all that you've done is you've learned in that time. So this is now you learn, okay, let me start dollar cost averaging. I know I bought a little bit at 65, but let me buy some more 29. Let me buy some more if it goes to 25. You know what I mean? End of the day, the main concept is we are just trying to get everyone out of these crappy currencies, because everyone keeps talking about Bitcoin correcting. What has your dollar done, or what has your currency done in the last 30 years? It's been on the biggest downtrend I've ever seen.
Let's look at Bitcoin dominance yesterday, because that's the indicator for me that real fear is coming into the market. It shows that people went back into Bitcoin yesterday. They panicked back into Bitcoin yesterday for the first time in a long time. I haven't seen a candle like that for the first time in a long time, saying people went back into Bitcoin. When people go into Bitcoin, it means that they're expecting a little bit of a winter. And so they're actually starting to say, hey, we're scared. We're going back into Bitcoin. We're selling our Ethereum. We're selling our altcoins. We're going back into Bitcoin. And that took the Bitcoin dominance up by a couple of percent yesterday.
No, it did. But it's also psychological. It's weird how the human brain thinks, but that 30,000 was it's weird how people like the even numbers. But as soon as that 30,000 was dropped and we showed weakness from that, that's all of a sudden when fear starts to accelerate. So it makes sense, right? At the end of the day, this is why we've always said that Bitcoin must be a massive part of your portfolio, a good percentage of it, because Bitcoin is king. If we're going to go through a long correction in crypto, Bitcoin is going to be the biggest one that they're going to want to always save.
Sure, I did find a salty comment. Hold on, there's a salty comment. Fred, just put salt on the comment. To get into the crappy coins, but we told you to get into the crappy coins with 5% or 10% of your portfolio. And if you did, you would have made 100x returns. So let's move on. Sheldon, what do you say we get 5,000 likes and then we reveal this indicator that you found today? Because this indicator that you found is insane. I've never seen an
Our little tool. Yeah. It's just, you know what I mean? It's time now because, we were having the discussion this morning, guys, that if this is a bit of a bear cycle, we've dropped 30, you know what I mean? So everyone's thoughts are that, how long could this last? How long could we actually sit through this? And this is where the importance of today comes in to show that. And when I went through it again, it actually blew my mind that how can we still be, even if it doesn't matter if we're in losses now or we bought a little bit higher, you're still learning the skills now where we can start to dollar cost. Are you looking at the likes there?
I'm looking at the likes. I see we've got 2,400 likes. We've got 7,000 people on the stream. Guys, smash those likes and we will show you one indicator that is going to show us whether we're in a bull, in a long-term bull, and it'll show us what the key levels are. A long-term bear market, and it'll show us what the key levels are.
And you know what? For all the salty people out there, you lost your money. Now you've learned to stop loss. I'm sorry. It happens. It happens in this world. But now you've learned to stop loss. I entered Bitcoin 10,400 last year. 2 weeks later, it fell to 3,800. I've learned to stop loss. I'm back. Am I gone? We're still here every damn day.
He just gave us a thumbs down. So, Freddie, just pour some salt on Chris Dominator. And then just block him from the chat. Just block him from the chat.
You know what, Ran? At the end of the year, where Bitcoin is where it is, they all back. They still watch the show every day, and they'll be loving everything again. Guys, it's lessons.
Chris Dominator was blocked. We only have space for love in our community. We only have space for love.
You're going to be upset with losses in your life. Remember, it's lessons. This is where you grow. If you're not going to take, you're going to keep losing and you're never going to get anywhere. Anyway.
Because we are running out of time and I do want to do some Q&A because the community keeps saying we never do Q&A. So today we are going to do 10 minutes of Q&A. Do we have enough likes? Freddie,
let's get some love. Let's get some love.
I see that Crypto Shake says my new webcam makes me look sick. I'm going to change my webcam tomorrow. I agree. I don't like this webcam. It's a terrible webcam. Logitech, you make a terrible webcam. All right, Sheldon, let's go into the indicator. This is a real wow. And if you like this indicator, give Sheldon a like. He has been working on this all day after boxing.
You know what, Brand, and so today what I'm firstly just going to show is obviously the tool first. I do have a lot of key indicators as well, and what's important is tomorrow the shows are back as well, guys. We're going to get back into a thing. I've been teaching you guys a lot about support resistance and all these things, but there's so much more I want to teach you. And when we come with that, you're going to start to learn there are so many different styles that you can use. And it's about time. We've learned the first ones, the simple ones, the basic ones, and now it's time to start lifting up. Now, looking at Fibonacci, and we're understanding the importance of 618, guys, and understanding that this is just a simple tool. Remember, the first thing that I've done here, guys, on my charts is I've set a line chart. If you don't know how to do that, you go to this little column. You'll see it's usually set on candles. You go click there, you go click on the line, and it makes a nice line chart for you. And all that it does is all the tops and bottoms, it uses the closing candle. So I like wicks. The problem with wicks is they look very manipulated. Well, they're very manipulated at a time where we can have a very exaggerated wick to the up or downward side and doesn't really make the lines the way I want it. So closing candles are very important for me. Now it simplifies and it gives me the easier pattern to see. And we were just talking about 2013. And what I want to show is, guys, how many times has Bitcoin been through this correction? If you bought Bitcoin in 2013, and we had this big push up and you bought at $160 and all of a sudden 2 months later it was at 70, guys, that's a 55-60% retracement. You would be having the same heart attack that you're having right now. Okay, so what I did is I went to the previous date and I took the previous low and I took the previous high just to show you this, so you can do it quickly. If you're looking at doing it yourself, you see this little Fibonacci retracement. So on your trading view, the third row over there, you got that Fibonacci retracement in play there. Now when I got that tool, all I want to do is when you're using it, you take it from the bottom to the high. Now, what this does is it shows me there was the first pump, 2013. We then had a retracement. By taking that, it shows me the key 0.618 level. That is the golden zone for Fibonacci, and we always want to hold those levels. Now, I put it to the test. There was the first run. We came down. We held the 618. When we held that 618, look what happened after. So this was a 55% correction. Look what happened after, okay? Then the power of this tool, we then had the next push up. We came down, we bounced perfectly on the 618. We had the push up. We then came down and we broke the 618. Now, the discussion that we were talking about this morning, me, Freddie, and Ran, was if this is a bear cycle, how long can it take? How long can we expect for Bitcoin then to start breaking the highs again and get momentum back in the market? Because we are starting to lose some key levels. Now, what I've seen now is when we break the 618 is when we go into accumulation phase, which means that...
Not accumulation phase. Call it what it is. A long-term bear market.
Brilliant. Exactly that. So it ends up being a longer term, meaning that you got to hold all we dollar cost as we go. But this means that it's going to take some time for Bitcoin to recover. So using this...
We broke the 6... The first time we didn't break the 618. That's your indicator in May or in go back.
So there's the first one over there.
Bounced off the 618.
Bounced beautifully off. We continued up. Okay. Meaning that we had a 55% correction, but it was actually nothing. We were still bullish. So until we break 618, it doesn't mean that a longer bear market or longer bear cycle is in play. So now we've started to use this tool with all the data. And we went to have a look. This one broke. We then went through a 448 day. There's a year and a half of bear cycle.
Zoom out. So there you go. You broke the 618. Show us the date when you broke the 618.
There we go. It was basically, call it the 10th, between the 10th and the 15th of September 2014.
When did we then recover? When did we then break that level again?
We broke it December.
Over a year later. 450 days. 450 days.
So basically a year and a half in that sort of region. As soon as we then recovered the 618, we then continued the bullish momentum. Look what happened next. There we go. Massive, massive, massive push up. Same thing. 2017 bull run. We hit it up. We came down. As soon as we show weakness and we break the 618, we then broke it. There was the first break over there. Even though we had a little bounce, we broke it. We showed some weakness there, right? I took it as we broke it, and as we started to recover back in, 441 days. There's 448 days, 441 days. So the main thing that we're looking at is when we show weakness to the 618 on the daily, we go into this longer extended sort of bear cycle, which means that it's just going to take time. Remember, money needs to flow in this market. Everything can't just pump. They have to prep for these movements. There's only 21 million coins. As soon as we then recovered, we bounced up, recovered, quick shakeouts. What happened next? Boom. There we moved up. Now, obviously, before anything else, I want to zoom out quickly. I know everyone is scared. Everyone is nervous. Does this look like super bearish, Ran? Does it look like, if we look at this damn chart, the history of Bitcoin, does it look super bearish? Just your opinion, even for a new person.
Bullish to me. It looks bullish to me. And you,
you know what I mean?
It's going to disappear like the 2013 correction on the far left of the screen, which you can't even see. It's like a little blip on the radar.
Exactly. But end of the day, we know that this over 10 years is a massive growing asset. The only question that we have now, are we still going to have this difficulty for the next few months? We've already been to 2-3 months of it. So it's not about, is Bitcoin going to be worth more in 5 years? Of course it's going to be worth more in 5 years. That's not the point of this. It's just to say that, should we still be in and out now? Or, is this a correction? Should we just be relaxing? You know what I mean? Just taking our time and giving the market the time that we need. Now, using that tool has showed us the beautiful understanding that 618 is the key level. Now, I took it now to the last recent wave that we have had now. So even though, guys, look at that wave up to the wave down. To have a look and just to say, oh, bearish, guys, I still don't understand it. But the main thing is 618 is sitting between 24 and 25,000.
Wow.
So what happened in 2013? Beautiful, beautiful break. And we came and tested beautifully. So for us to come and test that, it can get to that zone. But look how powerful this 618 is when we get there. Now, the main thing that we just want to know is, are we still going to have an end of the year bullish finish? Are we still going to have that 100K Bitcoin? Are we still going to have that? That off of the 2013 data, if we hold 618, of course we can. If we drop 618, we can go into a sideways market. We can go into an extended bullseye, but bigger picture, we know where Bitcoin's going. So I think the power of this, and yeah, go for it.
We're waiting for the 618. 25,000 is the key level, more or less, 25,000. We touch that 25,000. We either bounce and then we go for that double top or that double bull run, or we break through the 618, in which case we're going straight down.
It means preparation. It means sideways time. They need to accumulate. A little bit too much damage was done. They need to prep again, get confidence back in the market, and then extend it. But the main thing is, Ran, what you're saying is, if we hold 618, no, we cannot, off of the previous data, we cannot count that the bull season is over. That this bull run is. If we break it, it means it can be extended and moved maybe to next year, or, at the end of the day of that. And then we can look at the next strategies, because even though Bitcoin, when it broke the previous one, guys, if I show you, it
was nice having you on the stream, my friend. Free, put some salt on him. He's gone. Okay, he's gone. He's gone.
But if we have a look here now, Ran, if we do break the 618, guys, this last range that we have been in now, and I'm showing on the weekly now, but we know how choppy it's been and how tough it's been such a tiny range for Bitcoin. I haven't seen it in a while. Where if we do break it, guys, we are still gonna, even if it's sideways, there is gonna be a range and there will be strategies again. I don't care how many times we got stopped out. I don't care on everything. Guess what? You've learned a damn stop loss. Great. You've added it to your resume. But understanding that if we break that, we then look at the next strategy. Until then, guys, looking at this chart, I do not understand. I don't understand, Ran. You know what I mean?
We got to understand. Let's all change our Twitter profiles to our name and then the number 6, the letter 618. Let's do 618.
Show some support.
You're a comment 618. Freddie, post in the comments. All right, we've got 10 minutes. I promised the guys that we do some Q&A today, because we never ever
30 seconds just to close off
here. And you keep stealing from the community. You're stealing time of Q&A. But
okay, last one. Guys, every time we get our all-time high and we come test the 618, it's always between the 50 to the 60% range. First one, 58, 57, 59, and 58 again. So this is not showing something crazy. Go for it, Ran.
All right, so let's go through comments and let's go through questions. If you have any questions, we try to get to all of them. If there are super chats, we'll try to get the super chats first. You don't need to super chat. We don't need your money. We know that money is precious in this kind of market. But we do want to start answering your questions. Let us know what you're thinking. Someone here says your 618 is in the wrong place.
My 618?
Yeah.
Why? There's my 618 there.
Jamie, let us know what you mean.
Yeah, please. Just make sure.
All right, let's go through. What do you think of dot finance? I like dot finance. I am a little bit concerned of all the small altcoins. Right now, the small altcoins have been obliterated. You got to have big kahunas to go into small cap alts. You really have to have big kahunas to go into small cap alts right now. But if you do have those kahunas, then I think dot finance is actually quite a good one. I mean, I must say, I am invested in it, as you guys know. So yeah, I think definitely I do like it. We've got Solon Dennis. He says, Ran, why don't you allow people to criticize you? I think we do allow people to criticize us. I think there's a difference between criticism and salty. People who can't accept responsibility for their own actions.
And I think end of the day, Ran, this is not charged to anyone. You know what I mean? If you don't like it, you don't have to watch it. It's very simple. We care for it. We just want to help the community. That's it.
Yeah. The shorts, someone here shares, the shorts were right. Just admit it. The shorts were right. Obviously, in hindsight, anyone who was short from 64,000 was right. But at the time, no one could have known. And if you exit every time that you think that the shorts were right, I'll show you 100 times where the shorts were wrong before that. And then they missed all the ups and all the downs. All right, let's go through some other ones. Can we see Fred?
1 million subscribers.
Never. Fred says never. Fred says 1 million subscribers. Okay, 1 million subscribers it is. 1 million subscribers it is. Sheldon, this one is one for you. Someone says, how do you know where to put the 618? Or how do you know where to put your Fibonacci?
So you'll see your Fibonacci tool already automatically has the 6-1 built in it. So all that you do is, if you take this tool, remember, you always want to, if the wave is progressing up, you want to see, you're always going to take it from the bottom to the top. And you can see how the 618, I just highlighted it for you guys, but it just means that I take a little wave like this. Let's say we've had a wave up and we're coming down. You want to see how far down can we go. You take your Fibonacci, you take it from the low to the top, you measure it out, and the 618 is usually the golden bounce zone.
After the last Friday banter, it was said that Binance wasn't a safe place to trade. What platform do you prefer over Binance? So certainly we didn't say that Binance is not a safe place to trade. In fact, I think that Binance is probably the safest place to trade. I think we are concerned as an industry that something could happen, but I don't think it'll happen alone to Binance. I just think that Binance is the biggest, and so the regulators will go after Binance first. I think that when you're trading on an exchange, you want an exchange with a lot of liquidity, which means that you need one of the big exchanges. So Binance, KuCoin, even Bybit and FTX, if you're trading futures, you want the ones with lots of liquidity. Those are the ones that you've been doing it. Okay, we have Miguel Adiarte. He says, can you edit Ran's face on SaltBoy? We should do that. We should do that. Tomorrow. Freddie says tomorrow. That's a
good idea. That's a very good idea.
We love you, man. We love you. Another question. Should I hodl my altcoins too? What do you think, Sheldon?
Definitely, Ran. You know, they're the ones that have taken the, obviously make sure you've put them in the right ones. So make sure you put them in good fundamentals, what will survive a bear market. But obviously they've taken the bigger knock. They've been the ones that have pushed. And we've seen that out of all of these big corrections, you know, usually when Bitcoin goes through a massive correction like this, dominance will stay with Bitcoin for a while, meaning that even if Bitcoin bounces, dominance needs to be behind Bitcoin to get it back up where it needs to get. But then the alts come flying. You know, and that's where, and that's where you just got to be patient. If the alts are, you know, as long as they're good alts, you're going to be very shocked where they're going to be in a year, 2 years' time.
Ask yourself one question. Can the alts survive a long-term bear market? And by long-term, we've just said 445 days or 455 days. If they can survive a long-term bear market, then you should be buying it. Mr. Zero Siffy. Yes, I may have got your mail. I will get around to it. I do get thousands of mails every single day. So yeah, I will get to it. Thank you for the mails. We love it. It does keep us going, and we will eventually get you guys. Someone here says they have met Fred. Very, very handsome. I can tell you that if you think that Fred is handsome, you haven't met Fred. Can Vespa survive?
Oh.
Chacha, I'm going to be.
Red is good.
What do you think of Polygon? I love Matic Polygon. I think if you can pick it up now at 50 and 60 cents, wow, cheap. I just don't know where the bottom is, but I can tell you that I thought it was a good buy at $1. So at 60 cents, I really think it's a good buy. I think it's a really, really, really good buy. All right, one more question, and then we got to move on. People were asking what's going on with BlockFi. We will answer that tomorrow. I saw a comment here about BitBoy. What did they say about BitBoy?
He says the market's going to go up. Guys, we haven't broken the previous low. So the last low we made on the last dump was 28,800. We haven't broken that yet. We break that, 25 can be the next. Let's see.
BitBoy has said the market will go up many, many, many times, and the market just hasn't turned. He said, he keeps saying the market will go up. I think that you got to position yourself long term. If the market goes up, it's a bonus. If it goes down, you must be safe. Will ThorChain survive? Milk Salt, yes. ThorChain is a protocol, it's a decentralized protocol. It's got the best tokenomics in the world. It definitely will survive. Guys, we got to cut the stream because otherwise YouTube cut us. Love you guys. See you guys tomorrow. 2 shows tomorrow. Sheldon is back.
We're back.
Tomorrow. Same time, same place, 6 a.m. EST and 10 a.m. EST. Until then, if you're trading, put the salt thing up, Fred. Put the salt thing up. See you guys tomorrow.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their own research.